It's my pleasure to welcome you here to the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you make better financial decisions in your life. It feels like a broken record talking about the increases in insurance for homes and autos. It's been so much of what we've talked about. Well, the car insurance industry is facing something I don't think it's ever faced. The sheer percent of auto insureds that are reshopping their auto insurance is absolutely at an all-time high. And people are making completely different decisions with auto insurance. I'm going to talk about that straight ahead. And something that's not part of my life, buying lottery tickets. And it is for a lot of other people, particularly when the jackpots get really, really big and they call it like the Powerball and is the other one called Big Game or something? Whatever. You see those billboards around the country with the two
Mega Millions.
Mega Millions?
Yes.
Mega Millions and
Powerball.
Okay. Shows how much I know about it.
Mm-hmm.
And you, every time there's a giant jackpot.
I haven't bought a lottery
You don't do that anymore?
Not in years.
You used to when the jackpots would get really big.
I got in a pool, yeah. It was always in the company pool. I'd give $1.
And what'd you do with all your millions?
Yeah, unfortunately, we never hit it big.
All right.
It's all right. I've saved enough thanks to you.
Well, you know, the chances of hitting it, very, very small. But what happens when you do win? Sometimes you lose, even when you win. And there's a tragic story I'm going to share with you that has such important warnings in it. I got to tell this hard-to-tell story coming up later. But right now, let's talk auto insurance. So the rates have been going up and up and up. And the reality is, I know you're not going to cry a river, a lot of auto insurers have been losing big money. They got caught flat-footed by a couple of things. One, how much they were having to pay on claims because of the absolute rise in the value of used vehicles. Now, that problem is solving itself because, as I've talked about, the value of used vehicles has been going way, 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 way down. Not back to where they were before, but they're pretty far along that path. Values down somewhere 27 to 30% from their peak. But that was a big hit on the insurers. And then the cost of repairing vehicles following an accident has gone through the roof because there's an absolute shortage of people in the body shop business. And the parts have been expensive and hard to get and all that. And so there are legitimate reasons why the cost of auto insurance has been going up. Insurers now are starting to make money again. And so they'll move into the next phase. It's an automatic cycle in the auto insurance business. The insurers go through cycles that they're focused on their profitability, and then they go through cycles they want market share. Unfortunately, we're in the profitability cycle now. So it requires more work on your part when you get that shocking renewal price for your auto insurance to go shop. And people are being more creative in how they're shopping. Number one, I want your deductibles higher. Biggest mistake auto insureds make is having a low deductible. And so you got to make sure you don't go, if you have a loan on your vehicle, you don't go higher than the lender lets you go. But you want to raise that deductible because you don't want to make small claims on auto insurance anyway. It means I'm making you your own insurance company for whatever that deductible is. A lot of insurers will only let you have a deductible capped at $1,000. But so many people have these very low deductibles, and you don't want to make those small claims ever, not ever. In some states, like I'm eligible for a 10% discount if I take an auto safety course, a driving course. That's an online course. Doesn't take that long. I get a 10% discount. I think it's for 3 years. A lot of states have these kind of safe driver discount programs, not the ones the insurers advertise. I'm talking about that the state requires. And the take-up rate of people taking these safety courses in states that mandate the discount, about nobody. But these are things you can do. And depending on the state, I always talk about knowing what your credit score is and what your credit standing. There are errors with your credit report, which recent study by Consumer Reports found half of us had mess-ups on our credit report. Your credit report having bad information about you that's false drives your auto insurance rates way high. Number one factor insurers use in setting your rate. So you want to check your credit and get it cleaned up before you go shop around for auto insurance. And then I'm going to mention again something I've mentioned before, and it really is valuable for you to shop insurer to insurer, make sure you're getting the same coverages. But this crazy charge by the mile thing that is more and more available from insurers you've never heard of and more states, for a lot of people who live close in, don't drive a lot, this is a great way for you to lower your auto insurance rates. You pay a base rate based on your prior driving record, tickets, accidents, that kind of stuff. And then you pay a per mile. So if you drive not a lot of miles a year, like let's say you're driving 700, 800 miles a month or less, you're going to save money if you go to one of these per mile insurers almost always. And then the craziest thing happening, people are getting rid of their car. They're getting rid of the entire auto expense, and they're doing things like riding electric bikes if they live close in. They're taking Ubers and Lyfts. They're doing different things where they just totally excise that auto insurance cost, the payment for a vehicle, the maintenance and repair of one, having to pay for parking. I mean, it can actually work out for people who don't do an enormous amount of driving or live in an area where you can walk to a lot of places. It's just a thought. You know how much I walk everywhere
You
now.
do. You definitely do.
And I do something that you get a kick out of. I ride the public bus a lot in the
For
subway.
$1, right?
Well, because of my age, I pay $1. In New York City, where we are part-time, I pay $1.45 to ride the subway.
New York, the subway is the way to go for sure.
$1.45, I mean, not bad. And then elsewhere, I'm paying $1.
Nice. All right, we'll go to some questions. Joe in Texas says, we recently started receiving advertising and mail for a Lori Rollins at our address. This includes credit card offers. We do not have a Lori living with us, and my wife wants to know, who is this Lori woman? I explained to her that I don't even know a Lori Rollins.
Yeah, that's what they all say.
Yeah, it must be an error with one of the credit reporting agencies. I would like to find out what database has this incorrect information so I can get it corrected. My credit is frozen, and I didn't see any unusual information on my Credit Karma account. Any guidance you provide would be greatly appreciated.
So both of you need your credit frozen, and both of you would be very wise to have Credit Karma or something equivalent, because this could be just a clerical mess up. You know, this happened to me before, where we got mail for a UFO person. We recently were getting credit solicitations for someone Lane and I have never heard of at our address.
Allegedly.
Anyway, there is a area of identity theft known as synthetic identity theft. And it's not a laughing matter. It's the ugliest form of identity theft. And it's what they call John Doe, Jane Doe identity theft. What someone will do to throw off the fraud systems at the credit bureaus, at the banks, credit card companies, is they will take one person's social security number and use another name, and somehow, some way, it will fool a lot of the fraud detection systems used at the banks, and they will start issuing credit to this other person. By you, and hopefully your wife also having her credit frozen, you eliminate almost certainly the chance of synthetic identity theft being successful. There could be, again, a clerical explanation, but as long as you're monitoring your credit, nothing weird's going on, even if somebody's attempting to engage in synthetic identity theft, you're A-okay.
Keith in Wisconsin says, my wife is from Germany, and her uncle, who still lives there, sent us euros for a wedding gift. What's the best way to convert them to U.S. dollars, as we will not be traveling there for some time?
Okay, so you posed the question the wrong way, because my answer automatically
Go to Europe.
is this is a sign that you're supposed to go to Europe to use those euros. Sending somebody foreign currency is a problem. If you go into a U.S. bank with foreign currency, even a principal world currency like a euro, they are going to rip you off to the end of the earth. Typical U.S. bank will basically abscond with 10% or more of the value of those euro, converting them to dollars. So this is a tough thing, because if somebody sends somebody a check in foreign currency, they send somebody actual euro or Swiss francs or Japanese yen or whatever, there is no easy method to convert that money in the United States.
I have an idea.
I want to hear yours.
It may not work, but if you know anyone who's traveling to Europe anytime soon, you offer them a good exchange rate that's better than the bank.
How did you know what I was going to suggest?
Oh, I'm sorry. I did not.
No, but that's, great minds. That is absolutely the answer. It's low tech, but you may have friends at work or at a religious congregation or
Neighbors.
social club, neighbors that are going to take a trip, because people start talking about, I can't wait. We're going to France. We're going here. We're going there. Nobody's going to France.
And then they don't have to pay the
In
ATM fee.
Olympics.
Oh, yeah, that's true. They don't have to pay the ATM fee or anything.
Right. So you're doing them a favor when you are saying, hey, I'll be your bank. Here's a supply of euro. This is the best way to do so. Because I was thinking of other things, like I don't know there's any way to use Revolut or use anything like that to convert the money, because you have the physical currency. So this one is hard. The Olympics just about done now in France, and it's weird. It's like so many other Olympics. I lived in Atlanta during the 1996 Summer Olympic Games.
So did I.
And everybody thought that every road was going to be paved as El Dorado, paved with gold, and that they were going to make a ton of money on hotels. The airlines were going to make a lot of money on flights. People actually don't travel to a place that an Olympics is going on, as France has found out, and Paris the hotels ended up cutting their prices by like 75% from what they had anticipated they were going to be able to charge during these Olympics.
Andrew in Virginia says, I wanted to pass along a word of warning to those buying Costco gold. I made several successful purchases, but my most recent one came in a defective package. The gold is supposed to be covered in film, but in this instance, the film looks like it was peeled away and later reapplied. Upon receipt of the product, I immediately took pictures and contacted Costco. The frontline rep was very difficult to get through, but then finally she relented and submitted a claim. The claims department took a few weeks to get a response from, and then they decided my product could not be returned for replacement. So it looks like I'm stuck with a defective gold piece. I just wanted to give a word of warning to your listeners.
So Costco has said all along that any gold is a non-returnable item. The question I have for you, is the gold defaced? Is it damaged? Has it lost any market value? If it has lost any market value, then you need to pursue more with Costco. And historically with Costco, you could call corporate headquarters in Issaquah, ask for the CEO by name. I forget who took Craig Jelinek place, but you could ask for the CEO by name, and they will ring you right through. And but I would say, Ron, how would you say that?
Vacris?
Huh. Anyway, you'd call and you ask for Ron Vacris and see who you end up with about the problem. But again, if the gold has not lost any marketable value, then there's nothing really for you to be pursuing.
Could you do a chargeback because it's defective?
No, you're not going to do. You're not going to be able to get away with that. Chargeback would not likely be successful. But the real problem with Costco Gold is that they're selling it at such a great price, but when you go to sell the gold, you're going to really be shocked by the buy-sell spread and how much money you lose in the transaction selling it to a dealer when you want to move that gold. But gold has had such a run-up in value. I mean, it's really not a problem overall, because when you've had the run-up that gold has had, if you're in a position to cash in, or you feel the time is right to cash in, you're going to lose money on that buy-sell spread, but you're still going to make so much money on the movement that we've had in the price of gold. Coming up ahead, a terrible, terrible story about somebody who did what people dream of. They won a Powerball jackpot. And then what happened next is such an important lesson for all of us. This is an ugly story I'm going to share with you. 16 years ago, the Rosenau's from Minnesota won what at that time was a massive, massive lottery prize. Today we've had these billion-dollar ones, but they won $180 million, and they're in the publicity check, Minnesota State Lottery, holding the fake check that's like the size of a building, and all excited. And Wall Street Journal, among others, wrote stories about it. The Wall Street Journal story, I thought, was so well written. I'm going to hit you with some stuff from it. The Rosenau's were extremely religious. He was the son of a preacher, and they won this incredible sum of money. And back at the turn of the century, they had a granddaughter die tragically of a very rare disease that's called Krabbe disease, Krabbe, and it's 100% fatal. And they were like, this was, quote, divine intervention, that they had won this lottery jackpot. So the Rosenau's hired an insurance company, an agent, to handle investing this money for a foundation that they set up after winning the lottery, took this money and handed it to Principal Financial Group to handle for them. And Principal sent a private jet for them, flew them to corporate headquarters, song and danced them, and then proceeded over the years, this is all public record now, to cheat the foundation out of millions of dollars, this is just hideous, putting the foundation money to do research on this crabby disease. I don't know if it's crab or crabby. And demolish the money in unsuitable products with massive commissions, and then continually churned the money to generate more commissions and destroy the value of this money and line the pockets of principal and the salesman with them. This is such an extreme case. And by the way, what were they selling them? And they were such a trusting couple. And the wife of the couple has now died, sadly, as well. They were putting them in annuities and churning the annuities. It's unbelievable. And unfortunately, in arbitration, principal was only assessed $7 million. I mean, it's just terrible. I want this story out because, I mean, yeah, people read the Wall Street Journal, but it's a tiny percent of the population. And Principal is considered to be a mainstream, respectable insurance company. Any apologies? No apologies I've seen in any of the published reports about this. Here's the thing. You hear me talk again and again and again and again about the importance of only dealing with a fiduciary. And the insurance industry has fought tooth and nail year after year after year against every attempt to bring the insurance industry under a fiduciary standard. The banks fight year after year after year for their bank-based brokerages being under a fiduciary standard. What do they have to fear? A tremendous loss in income for their salespeople at the banks, their brokers, and income to the bank or the insurance company. Because if they sold what they should sell, which are products that are not based on being sold because of the commission feed or expenses, but sell what's best for the customer, this kind of thing would never happen. Never happen. Now, there's going to be difference in quality of one financial advisor to another. But if they're all required to meet a fiduciary standard, which means legally required to do what's best for the customer, not for them, this kind of malarkey doesn't happen. This is an extreme case, obviously, with just tragic circumstances. Absolutely terrible. And the last quote from Mr. And I'm sorry if I'm pronouncing the last name wrong. Last quote from Mr. Rosenau in the Wall Street Journal story is just so touching. Why would you take money away from poor dang kids that don't even have a year or two to live? What the heck's wrong with you? How much is enough? That's a question for every insurance agent, every insurance company, and every bank and bank-based brokerage and brokerage employee. Why not do the right thing? Why not?
That's so sad. Okay, we're going to go to questions now. This one came in from Denton in Ohio. Hi, Clark. I'm 54 and preparing to retire from one profession but continue working in another. I have a decent lump of money in deferred accounts and I will get a state pension, but I currently have a lot of debt also that I need to get cleaned up. I've heard of something called a holistic financial advisor who supposedly can look at all aspects of my financial life and create a plan for my current and future needs. Is that a real thing? Are they fiduciaries? And how in the world would I go about finding a legitimate one?
Okay, this is a great question. All right, so we hear so many terms bandied around, and any real worth his or her salt financial planner is going to be holistic. They're not going to be spouting about products. They're going to want to know about your life, where you are financially, what your goals are, what you want to have happen with your money someday. Is it important that it go to kids or grandkids, to charities, or just money you just want to make sure you're going to be okay financially? Any real financial planner wants to be holistic and look at everything. But that term is used commonly and has nothing to do with whether somebody is, in fact, a fiduciary, doing what they should be doing for you. On Clark.com, we have organizations listed that you can go to find somebody who is fee only, someone who is a fiduciary. And again, just because they're doing it the right way, they're a fiduciary, doesn't mean that they're going to line up with you, that their personality is going to mesh with you, that you feel like they're hearing you, they're a good listener. That's why you interview multiple people. So you use an outlet that gives you a list of real fiduciaries, but then that's not where your work ends. That's only where it begins, where you interview people, and you'll know because they're asking the right questions. You're like, hey, I didn't think about that. Oh, I didn't know that. And you'll find your way to that right organization and right individual. And you want someone who signs with you a legal fiduciary agreement. Not that it says they are.
We'll put a link to our article about finding a fiduciary in the show notes for today's episode. This is from Tony in Wisconsin. My father is 82, and last year he gifted my daughter for high school graduation $20,000 toward college, and my 16-year-old son his prized 1973 Stingray Corvette.
Wow.
He had planned on doing so since the day my son Jax was born. My understanding is that if he were to need Medicaid within 5 years of those gifts, he would have to spend down those gifts as they are ineligible per Medicaid rules. However, I have also read it's possible that these gifts could fall within a loophole if there was no intention of paying down assets in order to get Medicaid. He had always planned on giving the $20K to my daughter on graduation and the Corvette to my son on his 16th birthday, both of which occurred weeks apart. He's never been the best with money, and his remaining assets total about $100,000. In the event he were to need Medicaid in the next now 4 years, are we on the hook for coming up with the $20K in the car or cash equivalent, or would this fall under some sort of exception?
So this is a great question. So what we're talking about is known as the Medicaid spend down. And there were a lot of people who, and everybody has to make their own ethical decision about this stuff. There were a lot of people that were giving money to family members and stuff, impoverishing themselves so they became eligible if they needed nursing home care, that they become eligible for the state Medicaid program to pay for them. And so that's when these lookbacks were established. States enforce it differently. Most commonly is 5 years. And what they would look at as being an illegal or improper transfer of assets that then the state would try to recapture, it varies by state. So there are a lot of factors here. You mentioned one, intent. And you've read that. And it's a gray area. 2, the time period that passes from when someone ends up needing to be in the state Medicaid program versus when the transfer happened. If, as a practical matter, if the transfer had happened and the next month or 6 months later there was need for to be in the state Medicaid program, then the look back is much harsher. As you move through the years and get steadily more time between the $20,000 and the Corvette being given, then there's less and less risk of the state look back and claw back. But this is not like automatic that, okay, you did this, so this will happen. It is all kind of like a gradient, like a scale. And the longer this is not an issue, the better it will be in terms of how the state would evaluate.
Okay, and Michael in Maryland says, regarding I-bonds, would I be better off selling my bonds with a 0.4% fixed rate early with the 3-month penalty and buy bonds with the new higher 1.3%? And what about ones that I have that have 0.9% fixed rate?
So we get to math here. If your goal is to own Series I savings bonds for the full 30-year period, the value of moving to the current new rate of 1.3 versus particularly the older ones was, he said 0.3?
Yeah, I believe it was.
When you look at the older ones, no doubt it's less of a compelling case with the 0.9 versus the 1.3. But again, with a 30-year holding period, it would be well worth it to forfeit 90 days of interest, particularly because the earning rate right now is so much lower because the inflation rate has been so much lower. So if it were me, I would take the hit, and if the holding period intention is 30 years, and rebuy at the new much higher fixed rate. Just in review, with Series I savings bonds, there's a fixed rate which most of history has been 0%, and then the current inflation rate for that 6-month period. What's available right now is where you get the base rate, which is fantastic, plus the rate of inflation, which means you're always out kicking inflation, which is why Series I savings bonds are a great long-term savings holding. It's not an investment. It's a great savings holding. So that concludes today's podcast. And I want to say something about people who sell insurance and people who work for bank-based brokerages. These are not evil people. Most of them are doing what they believe is right and sound. My thing is there's too much temptation or too much culture at a bank-based brokerage or at an insurance company to sell products that have not the best interests of the customer at heart. And that's why I want you to know. And that's why I want you to be aware that it's almost impossible to recapture the money you have lost by being put in terrible products at a bank-based brokerage or at an insurance company. And that's why it's so much easier to get into trouble than it is to get out. And thank you so much for joining us on today's podcast. I hope you have an absolutely great rest of your day, and we'll be at your service tomorrow, continuing our mission, which is to help you save more, spend less, and especially avoid getting ripped off.